Hey everybody, it's Brian Shannon from AlphaTrends.net. Today's Friday, the 10th of May, 2019, and the markets lost some ground here this week. Semiconductors were hit the hardest, down close to 6% here, although most of the markets did bounce back here nicely today. Let's take a look at the charts and make some sense of it. The S&P 500 came down to the trend line, which best represents the essence of trend here, and that is it got hit today. Below that, we have a couple other levels of interest, the prior resistance at 280, of course, and then the 200-day moving average and the year-to-date volume weighted average price. We're still in an uptrend, and we closed above the 50-day moving average on both the last 2 days after testing that. So that's a good sign that there are still buyers in that 50-day moving average area. But on an intermediate term basis, we did see throughout the week a pattern of lower highs and lower lows with a declining 5-day moving average. So all week I've been telling subscribers to Alpha Trends that we don't want to trust the rallies for more than a bounce. Now, today's rally did take us beyond yesterday's high. We do have a declining 5-day moving average, but there's a couple other interesting things in this area here as well. One, the volume weighted average price that was so important as support from the April 1st, beginning of April that is, which held as support, is now overhead and declining. And today we came right up to, at the end of the day, the volume weighted average price from the all-time high here in the S&P 500. You can see it touched it with almost perfect precision before dipping a little bit lower. So the scenario for next week that would be the best bullish scenario for next week, that is, would be if this market were to pull back, perhaps down towards 286.5, 287, create a higher low, and then break some resistance. That would give the opportunity for that 5-day moving average to flatten out, and then for us also to get back above the volume weighted average price from the peak. So that's the potential for bullishness. Right now, the light kind of went from red in the intermediate term because it was below a declining 5-day moving average to yellow, where we're looking for a possible change back to the uptrend. But we'll have this is our important level that we really need to get back above and hold above, which is the conjunction really of those two volume weighted average price levels from the beginning of April and May. For the Nasdaq, we came right up to the declining 5-day moving average here today, and this market on a daily time frame is still also right up on that that trend line that we see is drawn from these points, and it closed above that, as well as that rising 50-day moving average and the volume weighted average price from this low right here. So as I was telling subscribers, we had three things coming together in this area. We had we had the prior resistance in here, we had the volume weighted average price, we have the 50-day moving average, and that trend line. So this is clearly an important level. And in both of these markets, the Nasdaq and the S&P 500, I think that today's lows are going to be important points to measure risk against. That is, if we can hold above those, that helps create this fledgling recovery of the sell-off that we have seen. So, some people, longer-term investors, maybe have, no concern about this, but, what we'd like to see is the same thing. It got a little bit extended here today, rallying from those lows in the 181s to 180, close to 186, and to pull back and then go would be the more bullish scenario. The Russell 2000 has really been all over the place. We've seen that it's been trying to break higher. That breakout seems to have failed as we're back into the range, but we're holding the 50 and the 200-day moving average. And this has been an important little area, or will be an important little area to hold. So this week's lows, if we break back below that, it would not surprise me one bit to see a test of the year-to-date volume-weighted average price. So I'm a little bit more cautious on the Russell 2000 because this is looking like, we'll need to see it probably back above 157.5, 158 to become more neutral. The semiconductors, as we noted, were down close to 6% this week, but still closing right on that rising 50-day moving average. If we take a look at some important volume-weighted average price levels, there's our year-to-date, of course. And the last touch of that we can see came right before this gap. And that's been an area of interest on this pullback. So I think that maybe in the near term, the worst is behind for the semiconductors, but there's no reason to buy them yet. We're trying to stabilize in here. That's the best case scenario. You can see that we're stuck below the week-to-date volume-weighted average price in here and the declining 5-day moving average. So these semiconductors will need a little bit more time, I think, to recover, perhaps another day or two bouncing around in this area, and then we could get that 5-day moving average to flatten out and make a run for the 20-day moving average. The biotechs continue, I think, to be the weaker looking group. They're not really breaking down hard though. If we take a look back at this list, you can see that for the week, the biotechs did lose 2.5%. So last week I made the case that this is the group that I'm most bearish because we're below a declining 20, 50, and 200-day moving average, as well as the year-to-date volume-weighted average price and below the volume-weighted average price from the December low. So this group is still guilty till proven innocent. In order for it to turn more neutral on the daily time frame, it'd have to take out this week's high. From an intermediate term perspective, we still have lower highs and lower lows, and I was pointing out this is why we don't sell. I pointed this out in the midday video today, that this is not the place to sell short. We don't sell short the lower low, not if it's had this type of decline first. Always ask, where has it come from? And am I being the sucker selling the break of that low? So still guilty till proven innocent on these biotechs. The financials are still innocent until proven guilty. So we've been talking about this inverted head and shoulders pattern, and I'm going to clear off a lot of this. We can see that the volume weighted average price from this low did hold this week. So that's another reason that this becomes an important area. We've got the 50-day moving average as well as the volume weighted average price from this low. So another market that we're going to want to see this week's lows hold. But realistically on the daily time frame, looking better of these groups, what we'd like to see from a nearer term perspective is kind of the same story. Maybe a pullback towards 27 and a quarter-ish, and then begin to break beyond 27.75-ish before it could be considered bullish in the intermediate term time frame again. Let's take a look at some individual stocks. In fact, I had mentioned on Yahoo Finance on Thursday that I like the way that Disney is setting up. It's broken out to multi-year highs, and you can see this 120 level has been a level of resistance for the last 4 years. Going down to the daily time frame, it got a catalyst with the Disney Go right here, and yesterday they reported earnings. So yesterday, after the earnings, the stock ran right up to the declining volume weighted average price from this peak. So what we want to look for is for that peak to be taken out. Today looks like a little bit of a shakeout below the volume weighted average price from that, let's just say the Disney Go gap. So next week, I think that for Disney, what I'd like to see happen would be a rally up towards this level, not to buy it if it makes an immediate move, but pull back and then get going. That way we could purchase it here with a stop underneath this level. Anyways, keep an eye on Disney. Let's talk about some of these IPOs as well. Beyond Meat, I've been talking about this one on Twitter, each day actually. And the volume weighted average price from the IPO was touched on the 6th, on the 3rd day. And when that volume weighted average price broke right here, you can see we came right down to the VWAP from the IPO. That's this one. And then yesterday I pointed out how it's acting as resistance. So right now, the average price since that it's traded hands at is about 70.5, meaning the average participant is down a little more than 4 points. So the sellers are in control and money is flowing out of this net because the volume weighted average price from the IPO is declining. So I'd say stay away from that one for a little while. We also have been talking about Lyft and the volume weighted average price from the IPO and the first test of that VWAP, how it held as resistance. And then from this low, we saw was the exact peak this past week that we tested the volume weighted average price from the first low and then continued lower. So this continues to be really a piece of garbage as far as an IPO goes. I would stay away from it. And then Uber, which priced at 45 today. I talk about these, first day IPOs. What you want to do is set two different anchors. One from the very first minute of trading. That's if you're going to be active in the trading of it. So this purple is from the very first minute of trading. The blue is from the second minute of trading. It takes out all those negotiated transactions right there on the opening print and gives us a more accurate picture of the supply and demand. Well, it acted as support here, and then when that broke, it got you a little bit quicker to see where that weakness really came in. So these are things I talk about all the time on Twitter, on alphatrends.net if you're a subscriber. So thanks for tuning in and have a good weekend.